We have Evan, Tristan, Karen, and Bernhard. And we're going to dive into the topic of financial inclusion. It seems very apt for those of you who heard the speech yesterday from Larry Fink. You will, I think he kind of exhorted everyone who makes it to Davos, whether you're in the conference center, whether you're in some of these side sessions, to remember so much when we hear about Davos in the media is talking about, the fact that, Davos is a place for the elite. It's a very exclusive group of people who actually get the opportunity to come here. But with that opportunity comes a huge amount of responsibility. And I think it's really important that in all the work that we do, there is clearly a very kind of important commercial side to the business, but also there is an impact side. And I think this panel and these group of people is really about bringing out some of that and remembering the opportunity we have and the privilege we have, but the responsibility that comes with that privilege. So very happy to be joined by this group of leaders. I'm going to run through and ask you all to introduce yourselves briefly, and then we can jump into the topic. So Bernhard, I'll start with you.
Yeah, hi everybody. Great to be here. Bernhard Kowatsch, Director for Global Accelerator and Ventures at the World Food Programme. Great to be here.
Karen.
Hello everyone, my name is Karen Hardy and I am the CEO and founder of Nature Wired.
Good morning, my name is Tristan Thoma. I'm the Managing Director of Impera Strategy.
Auyang, Group President, Animoca Brands. We're a blockchain investor with 600 portfolio companies, and we also do operations and real-world asset tokenization.
And Evan, I'm really glad you're here because I think some of the people on this stage, you sort of think, oh, of course they're involved in the impact financial inclusion space. It's not something we always think about when we think about what Animoca does. Maybe you can start by talking a little bit about what you do when it comes to the world of financial inclusion.
The way we think about our business is that it has to make sense in terms of the mission, right? That comes first. We started with blockchain gaming. Some of you might know that Animoca sort of incubated Sandbox, and then we went into a bunch of different assets as well. But then we also went through different verticals like AI, DePIN, infrastructure, and then we built 600 portfolio companies because frankly, we don't know which are the ones that are going to be the winners. We're trying to pick the companies that we believe ultimately would be the leaders in those spaces, and then we would advise them and take them to market and go from there. Now, in terms of how we think about decentralized finance, where we're going to RWAs and all of that, this is where blockchain makes a big difference because of 24/7 atomic settlement. Right now, if you think about the unbanked, right, it's still a huge part of the population in the world that is unbanked. And in the future, your mobile phone is your wallet, right? Your mobile phone is your bank, basically. And you can get yields up to that very second, right, that minute, by investing, $10 through your mobile app. And that's real financial inclusion. Now, that's really meaningful to us because if you are banking the unbanked because they're too costly to serve, what blockchain does, because it's public infrastructure, it allows you to leverage that infrastructure in a way that is a much lower cost and therefore allowing the accessibility to be had, right? And also, what the blockchain allows you to do is to get access to global liquidity through a single chain, where people can say that it's EVM based or Solana based. That's all to me is it doesn't really matter, right?
It's behind the scenes, yeah.
It's behind the scenes, right? But what it does allow you to do is that you have a plethora of products ahead of you that you can invest into, and you would imagine in the age of AI, you have AI agents that will help you pick those as well, to pick the right portfolio. Yeah. That is really like empowering and democratizing sort of financial inclusion. And once you have the stake in it as a user, then you have financial education. And therefore, even I think the regulatory environment would change in the sense that people would take much more responsibility in sort of what they feel is the right thing to invest into.
And I think that's a good point, because I think a lot of the time when we think about financial inclusion, we think about the sort of access to banking in particular, but over time it's access to sort of capital markets and the changing nature of those capital markets, both on the public side and on the private side, and the way that, you know, some of the innovations and applications in the blockchain space are kind of driving that accessibility. I mean, the announcements out of NASDAQ, for example, are really going to open up those markets in ways that we haven't seen before. But Tristan, I know that you have been very much involved in the world of kind of access to banking. Could you tell us a little bit through that experience about how you've seen the difference between the way we traditionally think about financial inclusion and what it means to have digital financial inclusion?
Yeah, absolutely. Most of my focus has been in developing countries in Latin America. So most notably in El Salvador, they had made the Bitcoin announcement in 2021. And they launched a national wallet, and my role was actually to come in and fix that wallet that had some technical issues on launch. And as we see with blockchain in general, is the second you have internet, you have money. And I mean, how many of us are farmers? How many of us grow our own food? Yeah, thought so. So the way we eat and the way we survive is through money. We're not agrarian economy, or agrarian population. So financial inclusion when it comes to digital is the second you have internet, you have access to food, you have access to housing, you have access to the entire civilized world. And a lot of that did not exist. For example, in El Salvador, prior to the wallet, there was about a 34% banking rate in the country. And within 6 months, the wallet that I got to recreate, we had over 70% of the country on that wallet. Not officially through bank accounts. There were more Bitcoin accounts than bank accounts in that country, and there are today. But it's a testament to the power of digital, because what the banking system couldn't do, or what the banking system did in, let's say, the past 100 years, we did in 6 months, but we doubled it. And it's more than numbers, statistics are cool, but there's a person on the street who needs food. And that food comes through just internet. The way that the government actually did is the government paid for internet access, so it didn't even cost gigas, right? In most developing countries, you have to pay for per megabyte. So that inclusion is, yes, a statistic, and it's food, and it's rent, and it's access to the world, exactly like you said, of the global economy, which the global south doesn't generally have.
Yeah. I think you make a good point there, even just around something as simple as the internet access, that yes, we perhaps need to solve some of the, access to banking, but alongside that comes access to other sort of ancillary services. And as part of a bigger picture, Bernhard, I know you work a lot with sort of very fragile populations, not sort of just developing and emerging economies, but sort of very fragile. Could you talk a little bit about that work and what it has meant for you in terms of seeing the impact of financial inclusion? I think both in terms of what it's meant in terms of cost savings, in terms of the work that you do, because I know those have been very significant, but also in terms of the real world, your end clients, effectively.
No, I mean, as World Food Program, we typically deal with the most vulnerable population, right? We provide right now also food assistance or cash to about 800,000 people in Ukraine every month. Over 1 million people receive food in Gaza. So also we serve people in Venezuela. So when you hear about the crisis in the world, that's typically where we are also active, right? And this starts from the hardcore emergency response. And in that scenario, this is where, I mean, to your point about we grow our own food. Even in emergency settings, maybe not, right? But the point is more if, let's say, you're displaced or you're living in an urban center and your house has just been bombed away, right? So essentially, financial inclusion gives you dignity and choice, right? Which is, and I think is an important point, where it's that's an aspect of, actually it sounds like a good thing to do, because instead of me telling you what you should be eating, you all of a sudden have a choice, I want to eat this, I want to eat that. And I think the interesting aspect there is we've actually done studies also with universities and other groups where we've been able to show that giving people cash or financial inclusion per se is more efficient than giving them food, just because we actually
that
empowering effect, and people are smarter and they're actually having better choices in doing that. And I think the aspect there is really where, so that's that piece of the puzzle. Now when you then go into like kind of digital financial inclusion, I think this is where, you know, I do believe that's where there's a huge opportunity where, you know, like talking with some people in the room, and I see, you know, Carmen from UNHCR here, so like there's like, you know, if you take stable coins, if you take other means, you know, maybe looking at like, what are your KYC requirements? Is it possible for people who maybe don't have identification, or maybe don't have formal identification or other means of identifying themselves to actually, I mean, to your point about the Bitcoin wallets, right? Like, so maybe you don't have an ID, but you have a Bitcoin wallet, right? And I think this is opportunities, and this is just very basic, right? You might be able to, like, if you're really poor, right, you might be able to save up a little bit. But you know, you can't go to a bank because you don't have a bank account. You might not be able to get a loan because you still don't have a bank account.
They may not be interested in you if you only have.
And they're not interested in you either, right? Because you have no essentially. Things to back this up, and like, but I think so. We've been active in a couple of programs where we do like microloans specific to women entrepreneurs and farmers, but also, and we're working right now also on like specifically in Latin America as well, trying to see like for World Food Programme, like stablecoin digital inclusion, like how that can even, you know, make it more inclusive and capture even more people than we've been doing historically.
So this is an interesting thing, because I sort of see it as like, Evan, you're very much kind of on the venture and innovation side. We're hearing a little bit about, you know, what it means in sort of banking through to the fragile economy. And then Karen, I feel like you are kind of bringing it back full circle to the consumers in some of those developed markets to give them a better understanding of what it is happening in the programs that they might be backing, either through their corporates or individually. Can you tell us a little bit about that work?
Yeah, so we're putting a corporate sustainability lens onto this. And we're using the digital infrastructure to really connect corporations with digitized projects. So these are verified. And a stakeholder engagement layer that allows employees to get involved. Not just employees, but customers and partners. So one of the challenges is, as you know, there's like trillions of dollars of ESG reports, information, but a lot of it's behind closed doors. We've got the Gen Zs and the millennials that are really concerned about the climate change and the environment, and they want to participate. I mean, the recent Deloitte research report, 74% of the employee population is going to be millennial and Gen Zs but in the next 4 years. And so they need to be part of this ecosystem. Now, if we look at the project developers, they're lost. They don't have a voice. They're carbon credits, or they're part of an ESG line. So bringing in financial inclusion is really about having this digital data layer that allows the information of the projects to be made available to not just the sustainability teams, but also to the other stakeholders in the organization as well. And I'll give you a little bit of context of where I'm coming from. So I've been on the task force or the working group, the GBBC's IWA markets, environmental markets, for the last couple of years. And it's been led by Jackson Ross, and we've just released the 3.0 of the digital MRV framework. And this really has an extra layer now called extension sets, and it's going to create a way in which verified information can be improved on a faster basis. And as part of that, I think this becomes a more human-centered approach to corporate sustainability.
Bernhard, we think a lot about kind of some of these individual stories about impact that we're having out in the world, but I know you also have some quantitative data which sort of speaks to the impact you're having, and I think that is important as well, also to sort of convince some of the non-believers about this space. So could you share a little bit about that?
Sure, and I think this is where somebody asked me yesterday, like, so, like stable coins, and like, so, why isn't it old? Like, are we beyond that? And like, so I guess the interesting piece here is like, so in a little bit, like, I guess I'm a tech or blockchain or optimist in a way, where like I wish it would move a lot faster now, but we're right now seeing fruits of things that we maybe have started like 10 years ago, and this is scary at times because like it's way too long, right? But just to say, like, for everybody here also, like, there is real opportunities right now also that maybe didn't exist like 2 or 3 years ago, right? Like when you talk about like stable coins, wallets, like all of that, right? Now from our work, and like, we talked about like the people we serve. Now there's also a question and perspective of like organizations or the people that donate to us, right? World Food Programme, lots of other organizations, UNHCR, are voluntarily funded. So people, governments, corporates donate to us, and like you want that every dollar that you donate to us, the most ends up with the people that it's intended for, right? And so, one of the tools we've been building is a blockchain-based. It's essentially a wallet or identity management system. So which is called Building Blocks. Now, some of you have heard me say this before, which is first in Jordan, in Bangladesh. Now in Ukraine, actually, we're using it right now as an identity management platform where it's used by over 55 different UN entities and NGOs. Okay. There, it's essentially over the last 3 years, we've been able to save $270 million. Now this is essentially avoiding duplicate transactions. So like the same family going to 2 different NGOs and then a UN entity to ask for the same thing. The system says, well, wait a second, you already got this. And I think this is an important point where it goes beyond like, well, like the lofty dreams, and like we get into like $250 million saved, and this is just one country where, and it doesn't work everywhere. You need identities like in other things that you actually need to make this work. But think about government subsidies. Think about other payments that you actually like. That's just a piece of like for me, a great example to just show like it is possible to really have large-scale change that also have monetary benefits, right?
Yeah, and that's, I guess, sometimes get a little bit lost in, particularly let's say the Davosian narrative as sort of the feel-good story. There is kind of real commercial impact, because also that's $250 million that can go back to other families who may not have been able to sort of access. And I can see Tristan is dying to jump in, so go ahead.
I want to comment on that and correlate it to kind of some of the experience I've had. Also, after El Salvador, I worked in Colombia, and El Salvador is a dollar economy. Colombia has their own Colombian peso. And what I saw is, I mean, if you go to any exchange house at any time, it has a line. Because what happens is people get paid in peso colombiano, and then they go to the exchange house, they exchange it for dollar, they keep it under their bed, and then when they need to spend it, they go back and they change it for peso colombiano. And they're paying the exchange house, and they're spending hours, and they're spending money on the bus.
Great example, yeah.
And with digital financial inclusion is okay. I mean, we're all used to having probably some of the companies you've invested into to provide exchange routes. And I mean, digital exchange also, we take it for granted. In a lot of the world, people don't have that, in particular in Colombia. And so when we launched, for example, we launched a crypto wallet under Bancolombia, that changed millions of people's. Just think of all the hours of transit and then waiting, and the dollars in exchange going to the exchange houses. Of course, exchanges need to find a new business, but that's your business. That's the success of your investments. But it really makes an impactful difference on the people that don't have to go through those unnecessary processes.
So, Evan, I'd actually like to ask you about that in terms of you've sort of, I guess, had this impact lens for a very long time in the work that you do at Animoca. How do you what are some of the filters that you put on projects that you look at in terms of, maybe it's not just the bottom line. What are some of the other things you're looking at in terms of how you think, given your experience, that will translate into impact down the road?
Because this is a new industry, so typically the interests are quite aligned. Unless you're in stuff like gambling, which we don't invest into, you are trying to attract users and you're trying to change how the users behave. And therefore, we believe this is a more efficient form of us, either within what you call the financial industry or within the internet. Therefore, just by attracting folks onto the platform itself is impact. But they, of course, need to make commercial sense, right? But there are projects that are purely on sort of the impact side that we look at as well, right? So sort of like we have always tried to look at sort of the carbon markets to see if that can be globalized better. We all know that there's a lot of friction in that. There's there are quality issues with that, especially in the voluntary market. There's even more challenge right now given geopolitics. But if we look at sort of there's various investments that we made in AI, for example, right? Are these AI agents going to be able to positively change our lives, right? That would be one of the things. When you look at a wallet infrastructure, does this allow greater access and financial inclusion in its user, sort of in its user interface and all of that, right? So that's always the lens. But because it's so new, it's easy to have the impact lens in terms of the investments that we make.
Just across the different markets you work in, is there anything you sort of want to highlight in terms of differences you see across perhaps different regions or different countries you work in, both in terms of the innovation, what's coming to you in terms of new ideas, but also in terms of the appetite from the demand side?
Well, the nature of blockchain is very global, so there aren't really, you can't sort of tell the country differences or where they're coming from because they all think globally. But one thing that is interesting to see is that if they come from places where geopolitically their currencies tend to be more volatile, there is going to be more that shift towards adoption of stable coins, the US dollar stable coin in general, which is very interesting because a lot of folks may not actually be asking this question, especially regulators, which is that in the age of stable coins, where the banks are actually now looking to increasingly adopt it because of the upcoming on-chain finance, what does that actually mean to the financial system in terms of monetary sovereignty of various currencies?
Yes.
So that is, I think, a huge question for financial markets. So for me, being based in Hong Kong, people are asking, why is HKMA, the monetary authority in Hong Kong, pursuing stablecoin tokenized deposits, central bank digital currency? It is essentially about monetary sovereignty, about your monetary system. And in Latin America and various places in the Caribbean, they are very much adopting US dollar stablecoin as the currency. And you can imagine that when you're in on-chain finance, whereas you do allow the financial inclusion via your wallet and all of that, imagine that all of that is now priced in US dollars. Right? Yeah. That is a very, very big question, a very, very big deal, because then the consumer goods that are actually denominated in those local currencies would then be based on a decentralized adoption, will be forced to readjust their pricing.
Yeah. No, this question about monetary policy transmission, I think, is very clear and very important. And I guess picking up on that sort of geopolitical point that you make, and Karen, coming back to your work, clearly, ESG has had changing fortunes, and the kind of ESG narrative has had changing fortunes over the last decade. How is that affecting the kind of take-up and demand? And how are you thinking about that as we kind of go into this kind of new era? I heard some people describe Davos this year as the funeral for the old rules-based order. So that's a little bleak. That is a little bleak. But as you kind of look ahead, how are you thinking about how that will change what you bring to the world?
Well, so sustainability is not going to go away, right? We've got to make sustainability sexy again. And as humans, we know we need to act. And, as we look at the corporate world, there's a lot of green hushing. There's a lot of focus away right now from exposing what they're doing around sustainability. But as we look at the digitized infrastructure, there's a way in which you can start meeting demand and creating stories. So we're looking at it from changing the conversation from just the sustainability teams to going to the heads of HR and culture, marketing and brand and PR. How can you create the stories? How can you bring in the people to start to connect with the projects? We're focused on the UN Sustainability Development Goals, and out of that you can start to really focus not just on carbon, but on the stories around the project themselves. We're looking at carbon forward projects, so that means like a mangrove restoration project through an ecosystem partner can be used for the employees to back, to start to learn. Women are planting the mangrove trees, and it takes a few years before that sequestration takes place. But it's actually starting to create interest and momentum within the organization. You know, I think we've all got to sort of think about how do we create a way, a mechanism for sustainability to be sexy again.
Yeah. I think, I mean, it seems interesting. As you were speaking, I guess what I was coming to mind is that actually we might be looking at almost the mainstreaming. Ironically, this attempt on perhaps on one hand to kind of push down that agenda over here is meaning it's spreading out into other areas and actually being more mainstreamed, because, you know, it may not be, you know, in this current climate, you know, sustainability in the headlights, but sustainability is kind of getting much more deeper in organizations.
Right, and I think the organisation leaders need to stop being passive and really connect. It's not just the financial teams; it needs to be across the board.
Bernhard, I know you have been working on your work for a very long time. I think when we first met, I mean, you were still working on it then. That's 8 or 9 years ago. You're still driving it now. For people who are looking to effectively do what you've done, like, what are some of the, it's taken you 8-9 years to get where you are, and I think the impact is impressive, but I remember the early days, it was like 5 people in the room, right? So like, how can you help others shortcut, and like, what has been the hardest part of bringing people along, and what are some of the tips you can give to people here how to have the same impact you have had?
So I think, of course, like, the more assets you have, the more assets you start with, the better it is, right? Like, so like, I'll preface with that. Similarly, like, I think technology and like a lot of like the developments that we've seen also make a lot of the things that we tried and started, like, you know, building blocks. First we built this on Ethereum, then we did like a private Ethereum blockchain. Like, it's like, you know, this is in the days of like when like you wouldn't restart it like the way we did, like, you know, 10 years ago, kind of. Now, so I think there's a lot of, you know, also tech providers, like, you know, also even stable coins. Like, look at Circle, right? Like, there's stuff like that happen right now where you say like, well, that did not exist, right?
Didn't even exist, yes.
So I think that there's lots of good things that I think make it a lot faster for people to start right now. Now, I want to lead with one thought, which is like, and I think actually building on the sustainability argument, like, I think everybody in this room knows like Mohammed Yunus. Now, some of you may know him for maybe like for the person that does a lot of good. I mean, in all fairness, he made a lot of money giving loans to people that previously didn't get loans, right? Which is financial inclusion. Now, and I think, but this is where I do think there's an opportunity where I personally do not care whether you actually do financial inclusion work because you're convinced and ethically, morally think that that's the right thing to do, or you think that you make business and you do good at the same time, and it's totally possible. And I think there's a lot of good things, like specifically in this example here, where I think trying to find that flywheel that actually make it work immediately, I think is a good example. The other one is like finding the right partners, and I mean, we've been you know, partners with member of GBBC for a long time. That probably was crucial. Also, like making the connections with the right people. So I think I would say part of that is probably like starting from not different. I mean, if you go to essentially El Salvador or Colombia and you start up a new wallet, like you're doing this by, okay, you co-develop with the people, you need to solve a real problem, right? Then you need to get it to scale. And like, I think that flywheel, like, if anyone in the room here, right, like, just think about this, like financial inclusion. I mean, we can give loans to people that previously were unbanked, right? And as we just heard, like those people actually, like, there's some common belief, well, everybody who's poor, well, you know, well, they're unbankable. They're not unbankable because they don't have a future, because they don't want to invest. Sometimes it's just like you lost in the birth lottery, right? Which means, and I think this is a real opportunity, like connecting also, I think, business, investors, and like the technology. I think that's how you can fast track some of these aspects.
That's really helpful, and I would encourage anyone to go and pick Bernhard's brain afterwards if you haven't already. But Tristan, I mean, El Salvador, Colombia, where's next?
It's also relative to what you said again. I've now been in Bolivia for maybe a little over a year actually, and they're starting to organically denominate things in USDT. Just if you go to a store, you'll see Bolivianos, that's the currency, and the Minister of Finance is here, and one of their primary concerns with digital assets is understanding their fiscal sovereignty. But as the market organically adopts an unstoppable internet money, then it's how do we respond appropriately, and how do we make sure that, yes, of course, the government needs to be protected according to fiscal sovereignty, but also the people have an unrestricted access to it. One of the things that happens once you start to digitize, also between banking and general digital assets of a transaction history, like you said, is once you have a transaction history, a risk or a creditor, really a creditor, can look at your risk profile and say, this person has done X amount of transactions, they've done X volume over the past time, they've received very consistent income or not, they pay consistently or not, and then can actually have data to establish a risk profile to then lend on. And I think that was one of the big innovations of Grameen, and et cetera. And I'll say the current state is very much like you had alluded to, of these developing countries or countries that are not dollarized and that may not have the strongest currency, is figuring out, yes, from the ideal government is supposed to take care of its people. That's your job. So how do you take care of your people, which the most effective and efficient way is to give them untethered access to all of the tools that exist, but at the same time, if you do that too aggressively as a government, then you are risking your fiscal sovereignty, which has long-term impact on how you can govern and take care of your people in other ways over time. So I think that's interesting.
It is, and I think there's an interesting question there about chicken and egg, right? Previously, there was much more possible capital controls and so forth. Now people can simply access US dollars when they couldn't before. And so the question then is, well, did the accessibility of US dollars drive that dollarization, or is it simply the kind of natural consequence of having a domestic volatile currency that maybe that should be the focus on stabilizing?
What we're seeing in Bolivia, and most of my current work now, is building the crypto integrations for banks. So we launched one of the first and only on-chain wallet for a bank. Very proud to say this past year we launched. And we got approval from the regulator. It has its own liquidity mechanism, its own liquidity access through local market. Okay. So it's going through local market on and off. Of course, it uses U.S. correspondence, and it's U.S. stablecoin based. But the regulators are starting to see, yes, this makes enough of a benefit and an impact on our people such that we will approve it being available publicly. And the government is saying, we don't see this as an existential threat right now. Whether or not they understand the implications of it is a different conversation for offstage. But it's happening. And we just actually started with one of the largest banking groups in Bolivia, which is surprising that it's being allowed, very frankly, at scale to create this infrastructure of it's going to be USDT, USDC against Bolivianos at an open exchange rate similar to how we did in El Salvador of Bitcoin dollar, which the implications of which I think are historic, and I hope to be here next year and tell you how it goes.
Thanks a lot. Evan, I'd love to hear you a little bit about what you're seeing, like what we can expect trend-wise going forward. You touched a little bit before on the agentic side and where that and, internet money, stable coins, digitally native money are kind of colliding. Could you tell us a bit more about that and any other trends that you're seeing kind of on that kind of innovation aspect?
On the consumer side, you would imagine that I would say as soon as 18 to 24 months, multiple AI agents working for us, doing different things, using your wallet, which is much more user-friendly, deploying investments, maybe buying groceries for you. There are a lot of stuff that you actually don't need to think about. Now is your credit card on Amazon or whatever, and Google.
Yep.
Hopefully in a way that when decentralized identity is finally regulated at some point in time, which I don't think is 18 to 24 months, but once you're able to delegate AI agents, some of the simple tasks can be done. That's on the consumer side. I would say that you would see the next Web3, big Web3 applications to be coming in, because we feel that why we're doing all of this while we're in altcoins and all of that is because we believe that the next Amazon is being built now, right? And that's why we're a portfolio, and that's what we want to hit. Now, on the regulatory front, I want to mention that because we're talking a lot about financial inclusion, regulations, and all that. I think the governments that are actually doubling or tripling their blockchain and AI regulation, maybe blockchain, I don't know, don't want to comment on AI, it's much more complicated in terms of regulation, but just on the blockchain side, because it has to do with financial system, you got to get ahead of it, because the problem is that you would see the decentralization of finance is really coming, and regulators are just so behind, even the ones that are most advanced. Yeah. And if they're left behind, they will not be competitive versus our domiciles that are ahead, right? I think they're still not thinking in that right way. Yeah. But you see regulators from VARA to ADGM being much more pushing because they have nothing to lose, honestly.
Absolutely.
But you got US pushing ahead, even though Trump is, you might comment one way or another how he's behaving, but on the back of the regulation, on the back of what he does, the regulators are looking at it thoughtfully.
They're more empowered.
They want to do more to make sure that it's appropriate, and they get Hong Kong and Singapore. Yeah. Those are the ones that are really pushing ahead. You get Europe of MiCA, but a little bit slow overall. Yeah. So I think there is a regulatory competition overall.
Yeah, and that's really interesting. I think your point too about Amazon, I think one of the most interesting pieces of litigation to watch is the outcome of Amazon and Perplexity and the litigation they have around who has access to the platforms and the importance of distribution network. So I'm not too surprised to hear you say that we are going to see the next Amazon unbuilt. There's clearly a lot of competition coming into that space. Karen, I would love you to close this out, because I think what you're doing, you are at an early stage, but it's really, really exciting. What do you see that next sort of 12, 18 months look like for you at Naturewide?
So I think that right now the opportunity is to start to showcase these pilots. We're connecting to the Hedera Guardian open source. And so we're sourcing projects, working with the ecosystem to really bring in those projects for employees and stakeholders to connect. But there's a challenge with the data and the information. So I think AI is going to play a role. I think there's context matching that's going to happen. And, I think ultimately it's going to be about transparency, trust, and ultimately engagement.
Karen, thank you very much. I'd also just like to close by saying thank you very much to GBBC. Through the very changing fortunes, I will say, of the blockchain ecosystem over the last decade, they have been a constant presence in Davos and making sure that these continue to be very rich conversations, an extremely important stakeholder in the space. Also in bringing a breadth of conversation, it is very easy to fall into this is all about finance and payments and so on and so forth. You come to this room, though, and you see a much broader view of what the world is going to look like going forward. So thank you very much to the team to bring us all together to have those conversations. And thank you to the panelists.
Thank you.
you.